Hello, and welcome to this session. My name is Leroy Meadows, and today we want to talk about activity-based costing and activity-based management. Overall, this is an alternative way of allocating overhead using activity-based costing and then making management decisions based on this alternative method of allocating overhead. So let's go ahead and take a look here. What are some of the things we're going to do here? We're going to explain how broad averaging under cost and over cost products or services. We're going to give 3 guidelines for refining a cost system. We're then going to distinguish between simple and activity-based costing systems. We're going to talk about a 4-part cost hierarchy. We're then going to discuss cost products or services using activity-based costing. We're going to talk about and evaluate the benefits and costs of implementing the activity-based costing system. We're going to talk about how managers use activity-based costing systems and activity-based management. And then finally, we're going to compare activity-based costing systems and departmental costing systems. So let's recall that before we've talked about in the book here that plant overhead is applied to production in a rational, systematic way using some type of averaging. Variety of methods to accomplish this goal. In a simple costing method, we're going to see that these costs can be inaccurate, whereas if we have a complex system, usually they're more accurate costs for each one of our products. Now there's going to be a trade-off here, and we'll see a little bit later. There's cost-benefit analysis that we have to do, because the more complex of a method that we use, the higher the cost of implementing and maintaining that. Are we going to get the benefits that we need out of that more complex method? If we're not, then we may not be wanting to implement that complex method. However, if we yield more accurate pricing or more accurate costs, which leads then to higher profits and more accurate profits on a product line basis and overall, then it might be worth implementing. So before in job costing, we were introduced to the plant-wide overhead rate, and this was just where we took our estimated total estimated overhead costs and divided it by the estimated amount of the allocation base that we were going to use. On this, we had to get a total of all overhead costs to be allocated. And remember, we had this total estimated overhead cost pool, which was just simply the total of all the individual overhead costs put together. Remember, that's a cost pool. It is a linking or combining of individual overhead costs. When we add those together, we get that cost pool, and then we're going to find some systematic cause and effect if possible. Remember, there's 3 ways that we can do that: cause and effect relationship, benefits received, or the ability to bear costs. However, in most cases, especially in the manufacturing sector, we want to find that cause and effect relationship. There's no easy way to identify it. We could make mistakes in the process, but we have to figure out what is our best base. Is it going to be direct labor hours? Is it going to be machine hours? Whatever it is, we have to determine what the best base is. What's the best linkage of overhead cost to the activity or whatever that cost driver is driving those overhead costs. And so we compute a rate to allocate overhead costs to all products. So, for example, and let's just re-illustrate this here. Let's say that I have, and I'm just using my own example here, $200,000 worth of overhead. And there we go. $200,000 worth of overhead. And I found that the one base that seems to be most likely my cause and effect relationship is machine hours. So, and let's say I expect to use next period 1 million machine hours. So what is my allocation rate? That for every machine hour I'm going to incur, I'm going to get, I'm going to assign overhead. So 200,000 divided by 1 million, and that gives me 20 cents. And so under a plant-wide overhead rate system, for every machine hour I incur, I'm going to allocate overhead. So let's say job 125 incurred 55 machine hours. So 55 machine hours times my allocation rate of 0.20 gives me how much? 55 times 0.2 gives me $11. Oops, not 100. $11 of overhead allocated to the job. And then when I take that overhead allocated, I combine that with the cost of direct materials and direct labor to get a total cost of that job. So now this rate is used to allocate overhead costs to all products, and sometimes we can have a departmental overhead rate. Very similar in concept, but each department will have its own overhead cost pool and its own allocation base. For example, we have Department A, whose best allocation base may be direct labor hours, and Department B, where the best allocation base is machine hours. So what am I going to do with the overhead, total estimated overhead? Well, I'm going to find the overhead link, the estimated overhead. I'm going to try to find out which, for which one of the overhead costs that we're incurring, how much, what department is it going to affect? Is it going to affect Department A or Department B? In some cases, I'll have to split that up. But we have our own grouping of indirect costs in one department and our own grouping of indirect costs in the other department. So A would have its own group of indirect costs divided by its allocation base to get its overhead allocation rate. Then in Department B, we would take the estimated overhead costs we incur in Department B, divide that by the total estimated amount of the allocation base to get our allocated, to determine our how much overhead we're going to allocate based on that allocation base. So let's go here and let me find my mouse because I keep losing it. Okay, so for our example, let's say we have two departments, A and B, with overhead costs of $300,000 and $400,000 respectively. Now the best case, the best base or the most likely cost driver in Department A is direct labor hours and machine hours in Department B. So I'm going to have, and let's go back here. So Department A is direct labor hours and machine hours is in Department B. So for Department A, and you might want to screenshot this after I get done typing on here, we're going to look at four different scenarios. We're going to look at Department A, which is based on direct labor hours, Department B, whose overhead is linked to machine hours. Then we're going to look at and we're going to compare a plant-wide allocation rate of overhead based on either direct labor hours or machine hours. And we're going to compute all that. And then we'll see a few slides down the effect of that. So and let me get my typing thing up here. So if my overhead for Department A, I have my overhead of 300,000 divided by how many direct labor hours do I anticipate using in Department A? Well, it shows right here, I expect to use 8,000 direct labor hours. So if I take that 300,000 and divide that by 8,000 direct labor hours, what do I get? And 300,000 divided by 8,000, and that gives me 3750, just what we have our allocation rate here, 3750. Now let's take a look at Department B. Department B allocates overhead on the basis of what? On basis of machine hours. So we have estimated overhead costs associated with just Department B of $450,000. And we're going to spread that out over what's our allocation base that we expect to use. We expect to use 1,200 machine hours next year. So when I take 450,000 and spread that out over 1,200 machine hours, I'm going to get overhead allocation rate of $375 per machine hour that's used to make any product. And we see that right here. Now, if I decide, now I'm going to compare departmental rates and then to plant-wide rates based on either direct labor hours or machine hours. Okay, so let's see, plant-wide based on direct labor hours is going to be what? 750,000 spread out over 15,000 direct labor hours. And let me just get my calculator out here just to make sure that the numbers are right here. 750,000 divided by 15,000. And we get $50 allocated rate per machine hour. Or direct labor hour, if we use a plant-wide rate and just have one rate which we're allocating all overhead. Now let's take a look at the plant-wide rate based on machine hours. And I'm just going to abbreviate it MH. So we're going to take that same 750. And let's see here, 750 divided by how many machine hours do we expect to use in the next year? 1,950 machine hours. And when we do that, we take 750,000 divided by 1,950 machine hours, and we get a rounded rate of $384.62. Rounded per machine hour. So I've got my choice. If I'm using a plant-wide rate, I've really got my choice of either direct labor hours or machine hours. And we're going to compare how we use both of these versus a departmental rate. So if you want, go ahead and screenshot this, and because we're going to go ahead and come back to this here in just a little bit. So, okay, so now let's take a look and look at a few things before we come back to finishing out an example of what we just saw when we computed those rates. Broad averaging. When we talk about broad averaging, we're talking about peanut butter costing. And your PowerPoint says here, because it spreads evenly, no really definition of why it became, or no clear reason why it became peanut butter costing. But if we have a small number of goods and we produced them all at the same time, indirect costs were relatively small because we had fewer product offerings. We specialized in making certain things. So allocating overhead was simple. We just used broad averages to allocate costs uniformly regardless of how they are actually incurred. So when we spread out overhead costs using one cost rate, what happens? Well, generally, the products using fewer resources are overcosted, and the products using more resources are undercosted. So let's take a look and see what over and under costing are. Overcosting occurs when a product consumes a low level of resources but is allocated high cost per unit. In other words, we are assuming that there's too much costs, and the costs are too high, or the costs are lower than what we actually believe they are. So I may believe that something may cost me $5 to make, but in actuality, it may be $4.30. So what is undercosting then? Undercosting occurs when a product consumes a high level of resources, but is allocated in lower cost per unit. So the costs in these are higher than what I actually believe they are. So in other words, for overcosting, actual cost is less than, let me see here, less than supposed cost. And over here, my actual cost is greater than my supposed cost, or the cost that I believe that they are. So my actual costs are higher than I'm believing they are when the product's undercosted, and my actual cost is lower than my supposed cost. Now, why might that be a problem? Well, it's going to be a problem for a number of different reasons, which we'll look here in just a moment. So, and I cannot get rid of my, there we go. So here's why. If a company undercosts one of its products, it will overcost at least one of its other products, if not more. The overcosted product absorbs too much cost, making it seem less profitable than it really is. Whereas the undercosted product is left with too little cost, and it seems like it's more profitable, but it's really not. And you're going to see that example not only in the example we're going to come back to here in just a moment, but in the example in the book on Plastum. We're going to see how a more refined costing system will reduce the amount of undercosting and overcosting to get a more accurate product cost. So consider this. If we're going to use the cost information to determine a price, what effect would it have? What if I'm looking at product profitability to determine marketing focus? Or what if I'm using this, and let's say my cost object is not a product in and of itself, but maybe a department or a division or a segment, or maybe a particular store if we own a chain of retail stores. If I'm using cost to determine a price, what effect would this have on our decision-making process? Now, managers use product costs every day to make decisions, so if the cost is wrong, then it stands to reason that our decision is going to be wrong, because if the foundation of our decision-making is based on product costs and those product costs are wrong, then our decision-making will be wrong and we won't even know it. And that could cause us to lose money, or it could cause us to price our product out of competition to where no one's going to consider us. So now, based on our example that we looked at just a few slides ago, in the comparison between the department rate overhead for Department A and Department B and the plant-wide rate, depending on allocation rate for direct labor hours or machine hours, let's assume that we have job 457. It has 1,000 direct labor hours in Department A, 1,000 direct labor hours in Department B. it incurs 50 machine hours in Department A and 75 machine hours in Department B. So based on those rates, let's take a look at an example here. Department A is going to allocate on job 457 1,000 labor hours times 3750, $37,500 worth of overhead. And based on machine hours that we incur, which is our allocation base in Department B, we use 75 machine hours in that job, and the overhead cost rate we calculated before was $375. So overhead assigned to job 457, $28,125. We see that right here. So using my total departmental overhead rate, I'm allocating to job 457 $65,625 worth of overhead. Now, what if I were to use one of my two plant-wide rates and I was to use those? How much overhead would I assign? Well, if I was using based on 2,000 labor hours, remember 1,000 direct labor hours in Department A, 1,000 direct labor hours in Department B, so I'm using 2,000 hours altogether. 2,000 hours times my allocation rate of $50 per hour, I'm going to assign $100,000 of overhead to job 457. We already see a discrepancy here of almost $35,000 of overhead assigned. Now let's take a look here and let's look at machine hours. We had 50 machine hours in Department A, 75 machine hours in Department B, so we incurred a total of 125 machine hours. Now, based on that machine hour cost rate of $384.62 we calculated earlier, we're going to assign overhead of $48,077.50. What do we notice here between all three systems? The departmental rate, the plant-wide rate based on direct labor hours, and a plant-wide rate based on machine hours. We see a wide variance, a wide fluctuation. So, is a plant-wide rate more accurate? Well, not necessarily, because we're taking one allocation base, either direct labor hours or machine hours, and we're coming up with substantially different numbers of overhead allocated to the job than we do in departmental rates, which is a little bit more refined. Why? Because we're linking those costs to those different departments, so we get a little bit truer sense of the amount of overhead that should be assigned. Now, in this situation, we can see that there's a wide discrepancy there. So our choice of how we allocate costs, whether on a department or a plant-wide rate, and choosing our allocation base is critically important. So, okay, now let's take a look here at Plastum's simple cost rate. And Plastum has developed a simple costing system, and the example in your book says they are looking to go to an activity-based costing system. So what are they doing here? Well, we have our costs here, our cost to make our products, whether it's a simple lens or complex lens, but we're going to assign to those direct materials. We're going to trace those. Remember, direct materials are easily and economically feasible to trace to our cost object. Direct manufacturing labor, we can easily trace to those. And then for Plastum's overhead costs, let's say they use direct manufacturing labor hours at $60 per direct manufacturing labor hour. Now, so let's take a look here at how much using one cost basis, one cost pool, a simple costing system will allocate this. Well, we've determined that for the simple lenses here, the direct material is going to be $18.75 a unit and $10 from direct manufacturing labor. So our total direct costs, or our prime costs, are $28.75. Then we have indirect costs allocated $30. Now, how do we get $30? Well, if we look in the book, for plastums, we expect to use 30,000 direct labor hours for the making of 60,000 units. So let me put it up here. And the easier way to allocate overhead costs, as far as in this situation for plastum, is going to take my overhead rate cost per my overhead allocation rate times the actual amount of allocation base used. Well, if I'm using 30,000 direct labor hours to make 60,000 units, how many labor hours am I using per unit? Well, I'm using 0.50 or half an hour. So if my overhead allocation rate then is going to be what? Let's see, $60 per hour times 0.5 hours, which will give me on a per unit basis, how much overhead am I going to have? $30. So that's where we're getting to $30 here. Because not everything will take like a full hour, full machine hour, or full direct labor hour week. So we want to take that overhead allocation rate and incorporate into that when we're allocating overhead the actual amount of allocation base used, and we want to make sure we know how much allocation base we're going to use on a per unit basis, because that's key here. If I wasn't paying attention, I might have just wrote $60 here. But we want to take into account how many direct labor hours does it take to make the simple lenses. It takes half an hour. So I'm only going to allocate half an hour of overhead. So that's my $30. So I've got a total cost of making the simple lenses here of $58.75. Now, and then we can see the same thing with complex lenses here. I won't go through that, but we did the same thing here, excuse me, with complex lenses. Let's see here. And we expect to use 9750 of direct labor hours in the making of the complex lenses. So yeah, let's actually go to that. So 9,750. And we're going to divide that by how many units we expect to produce. We expect to produce 15,000 units. So 15,000. And let me go over here. And for some reason, my system is just being ornery. So 9750 divided by how many units am I expecting to make up here? 15,000 complex units, or complex lenses. So 15,000 complex lenses. So 15,000. And what's my cost rate based on direct labor hours? And if I calculate that out, 9750 divided by 15,000, I'm going to get 65 cents. And so we see here that it takes, so we see here, especially with the simple lenses here, I'm not going to compute all that out, excuse me. But for the complex lenses, we want to track our own overhead and everything there based on direct labor hours, so we can value the amount of that there. So now I've probably, and let's just go forward with this. We've assumed now that our cost is $58.75 for making the simple lenses and $97 per lens for the complex lenses. Now we want to remember that because our total costs are going to be are going to change, or our per unit costs are going to change whenever we refine our costing systems. So let me find my mouse here so I can get rid of it. There we go. Okay. So now in the decision-making process, the book tells us in our Plastum situation that another competitor has come in and we could lose Giovanni's business. So that's the first step that we have to identify the problem and uncertainties, and the problem here is that with possible loss of Giovanni's business. So what do we want to do in step 2? Obtain information. We want to get information, analyze it, evaluate the design, manufacturing, distribution operations for the S3. Why? Because we need to make sure that if we can reduce costs of the design or redesign things so that we can lower our cost per unit, maybe the manufacturing setup we have, maybe our distribution operations, whatever it is that we can lower costs and get in that more truer costs. Make a prediction about the future, obtain a better cost estimate for the S3, which we want to get a better cost estimate for. Making decisions by choosing among alternatives. Should we bid on keeping that client? And if yes, at what price? And then, of course, implement the decision, evaluate performance, and learn. So let's take a look here and continue. And just as a reminder, in the illustration in the book, Bandix Corporation is wanting to sell the simple lens. It's going to make only simple lenses, and it's going to sell them to our client for $53. And based on our information here, that's even below our cost based on our numbers now. So if they're selling them below our costs, we have two things. We have one. We have to examine: are our costs too high? Are their actual costs a lot lower than what we're anticipating? That's what we're going to take a look at here. So now, why do we want to have accelerated? Now, what are the reasons that have accelerated demand for refinements to the costing system? Well, an increase in product diversity. We're going to have a lot of different products. Not all of them are going to consume the same amount of resources. So, and some products, when we look at operations costing when we look at process costing later on in this course, we'll touch on operation costing. Some things may not go through the same process for one client as it does for another. We may not need to do all the steps or whatever. And there's also an increase in indirect costs with different cost drivers. And then finally, competition in product markets. With this being a global market where we can have competition from anywhere, we need to make sure that we are as competitive as possible in the markets we're in. Now, there's three main guidelines for refining a costing system: direct cost tracing, our indirect cost pools, and our cost allocation basis. So we're going to need to look at all of these. Now, the goal of activity-based costing is not to not just to eliminate direct cost tracing. Actually, what we're going to see is sometimes costs that used to be considered indirect are now going to be direct. So what does that do? That gives us a little more accurate pricing because there's less of those less of the indirect costs, which means that there's less room for error. Can we completely eliminate error? No, but we can reduce those somewhat as much as we possibly can. Now, when we look at costs, we're going to categorize these into a cost hierarchy. And these are different types of costs, different types of cost drivers, cost allocation basis, or different degrees of difficulty in determining the cause and effect relationship. So let's look at those four costs in the cost hierarchy. Output level units. These are costs that we can associate directly with the making of the products themselves. For example, machine operating costs. Let's see. Any type of costs that are performed on each individual unit is an output unit level cost. Now we have batch level costs, which is related to a group of units. This would be something to where, let's say, Coca-Cola, they have different sizes of Cokes, right? You can buy a 20 ounce, you can buy the little mini cans that you pay an exorbitant amount for, and you get like 2 sips and you're done. You have 2 liters. So whenever we're running a machine, we're not going to have a machine to necessarily make for every single size that we can make. We're going to use machines that are flexible so that we can shut them down when we're done making 2 liters, resize those, and readjust those machines so that our 20 ounce bottles will go through. Well, that time to switch that machine over to run a number of how many ever 20 ounce bottles are called setup costs, where we're setting up the machine to run the next batch. And the next batch and we're going from 2 liters to 20 ounce bottles. So that can be related to batch level costs, the setup costs. Product cost or service sustaining costs. They talk about their support for a particular product or services without regard to the number of units or batches. And this could be design costs associated with making a certain product. It can be marketing costs associated with the product. For example, the cost of advertising Charmin toilet paper. And if we're just getting the word out there, Charmin toilet paper, well, what do we have? Well, we do have different sizes. Is the advertising of Charmin toilet paper going to be specific to a specific size or to a group of related units? No. That's more of servicing the product itself. And then we finally have facility sustaining costs, the related costs of activities that cannot be traced to individual products or services. And these would support the company as a whole. For example, Procter & Gamble. You have administrative salaries, the CEO's salary. Is the cost of his salary just to support one product? No, it's to support all products and the whole company as a whole. So let's take a look at Plastum's activity-based costing system. We're now having, when they're assessing an activity-based costing system, we now have more direct costs. Previously, we only had, and let's go back here, direct materials and direct manufacturing labor costs with using a simple costing system. Now we've identified additional direct costs of mold cleaning and maintenance. So now we've got more costs associated with direct costs. So what does that do to the amount of overhead costs? Well, it's going to reduce that because now some of those indirect costs are now classified as direct costs because we can economically trace those in a feasible manner. So now, with our allocation basis here, we're basing this on activities. We're not basing it, now we can set it up on activity of manufacturing labor hours, but we're basing things on what do we do? No, an activity is a verb. It's something that we do. It's not something that we're just passively just sitting around. We're actually doing something. So we're looking for activities that we incur. In some departments, we're going to design activity, molding and machine setup activity, and up here at the top, molding machine operations activity, shipment setup activity, distribution activity, and administration activity. So we've identified what 1, 2, 3, 4, 5, 6 different activities that we're doing. See how much more complex we're getting already? Now we have to, with all these different activities that we've designed, we have to find a cost allocation base unique to that, or what is the best, not necessarily unique, but what is the best cost driver of each one of those activities. And in this case, for design activity, we're going to do 100 parts per square feet because these parts are a little bit longer, or a little bit bigger. Molding machine setup activity, well, we'll probably do that based on the number of setup hours that we do. Molding machine activity, we're going to base our overhead of $637,500 based on 12,750 molding machine hours, and we see go forth here. And what do I get? I get an allocation rate for each activity. So now in our computations, we're getting a little more complex. Remember, we talked about the activity-based costing is more complex, but we're more likely to get more accurate product costs. So as you see here, we have 6 activities. Before, we had a plant-wide rate activity of 1 allocation rate per overhead, and we got our costs for making the simple lenses and the complex lenses. And we were losing, or we're at the risk of losing, if we're Plastum, we're at the risk of losing business of one of our customers to Bandix. So now, let's take a look, and we just put this out on the spreadsheet, and we're going to have an explanation of what our cause and effect relationship is. So we're not just identifying what the cost driver is, but we're explaining what it is. So, and we're explaining how we chose that allocation base. Now, remember, and let's go back here, 58.75 was our cost to make the simple lens. 58.75, and the cost to make the complex lens, the C5, $97. So now we're going to write that down here. We'll just keep it on a separate piece of paper for now. Now let's take a look here and see, based on activity-based costing, where we've refined a little bit more now. Because remember, now in activity-based costing, we identified another direct cost that we could assign and trace to individual units. So now our direct costs are what? $30.75 per unit. What do we have before? $28.75. So we've already adjusted for direct costs to be are going to be higher under the activity-based method. So, however, with indirect cost activities, we are now assigning indirect costs, and my indirect costs allocated based on these different 6 different activities. We're allocating indirect costs to each unit on a per unit basis, $19.23. How much did we allocate before? We allocated $30. Big difference here. So now what have I determined my cost to be? My total cost under this refined system is $49.98. We did what? Our price was $49.98. Now we were determining our cost to be $58.75. So what is that a difference of? Well, let me get a difference of So our cost is how much lower than we anticipated. Our cost is what? $58.75 minus the $49.98. So our cost is actually $8.77 lower. Our competition is going to sell for $53 per unit. So do I now know that I can sell that same unit for $53 to match our competition and retain Giovanni's business? Yes, I can. Now, we have no competition from the complex lenses because Bandix was only going to make that. However, we do have to adjust what our actual cost is. Our actual cost we assumed before was what, $97. But my actual cost under a more refined system was $132.07. So when I take the difference there, what are my actual costs? So what? So 132.07. The difference between that and the $97. So my costs are actually $35.07 higher than I anticipated. That can make a big change. Now, if we had competition, could I sell that complex lens and remain profitable? It would be very difficult because my actual costs are $35 higher than I previously thought they were of $97. So now I know I can charge a little bit more for the complex lenses and come out to be a little bit more profitable than, since I'm having to lower my sales price for the simple lenses, maybe I can raise my prices on complex lenses by a little bit to at least get a profit on those. Because if I'm selling something for less than the cost of making it, I'm not going to be the brightest bulb in the socket. So there's an example of how activity-based costing is beneficial to getting more accurate product costs. And in this case, the reason that drove Plastum's search for activity-based costing system and to take that into account is because they were threatened by another competitor who was going to sell it for less than they thought they were even making it for. So now, if I'm making marketing decisions, I would have maybe, if this was something I could market to the public, which I can't, because I'm making lenses for an automobile manufacturer. But if this were to be something I could market to the public, and I'm selling it for a lot less, but it shows to be more profitable under a simpler costing system, could I be throwing away advertising dollars or marketing dollars and hours? Absolutely. So under a direct costing system here, we see the pricing was $877 lower than what we anticipated it to be. Our cost to make the complex lens, the C5 lens, was actually $35.07 higher. So now activity-based costing is generally perceived to be a superior costing method because it produces superior costing figures because we're using multiple drivers across multiple levels or multiple activities. We still have to keep in mind, though, the ABC costing system is only as good as the driver selected and their actual relationship to the cost. If we do not choose the appropriate cost driver for each activity, we will still maintain inaccurate costs even when using activity-based costing systems. So because of the human effort or the human effect, if we don't choose the appropriate cost driver, activity-based costing system does not guarantee more accuracy. We have to be really focused and make sure that we choose the appropriate cost driver. Now, again, activity-based costing is an alternative way to allocate costs. It is generally more accurate and more costly to implement because now instead of just taking one overhead cost pool, we're now having to break up into multiple cost pools. Remember in the platism example, we had what? 1, 2, 3, 4, 5, 6 cost pools, and we had to identify the cost driver of each. Now, what does that do? That takes time. And when that takes time, you're paying your people to do that instead of doing other things. So it's generally more expensive. You may have to hire additional people. And a company should consider refining their costing system when evidence suggests that their existing system is flawed. And for Platism or Plastum, they were in danger of losing business because of the higher price. Now, because there's a number of critical decisions, such as pricing, whether or not one product should be marketed or pushed over another, whether we're dropping a product, because that's all based on information we're getting on a per unit level, we should be taking the effort and time and costs necessary to arrive at a cost that is fair, reasonable, free, and as accurate as possible. Now, the goal here is not to attain costs that serves the current purposes of perpetuating inaccurate costs, because we want to get an accurate cost because maybe we're missing a gem, like a diamond in the rough. We don't know about that diamond in the rough because we think it's just maybe another piece of stone, just something that glitters, okay, whatever. It's just a cheap piece of glass. But we may not see that diamond because it's covered up by so much other muck around it that when we use an activity-based costing system, or more refined costing system anyway, and we clean off some of that muck that's distorting our vision or our view of product costs, then we may be able to see something that we've got on our hands that that we didn't see before. Now, again, this is imprecise science. Differences of opinion are likely to occur. However, and it's an imprecise because we are not, we can get so crazy with activity that we could just literally develop maybe even dozens or hundreds potentially of activity bases or activities. We have to determine the cost and effect or the cost benefit relationship here. Now, how should we, or what are some signals that represent an activity-based costing system, if it's implemented, could help a firm? Well, first of all, significant amounts of indirect costs are allocated usually only 1 or 2 cost pools, as we saw that with Plastum. All or most indirect costs are identified as output unit level costs in the cost hierarchy. And we have, or because we have a number of product diversity, so with that, we have diverse demands on resources because of volume, process steps, batch size, or complexity. Products that our company is well suited to make show small products. So the products that we're best suited to make show very small products, where products that we're less suited to make show large profits. Another thing that could suggest that activity-based costing implementation could help a company is when operations staff have substantial disagreements with the reported cost of manufacturing and marketing of products or services. So when we all can't agree or get a general consensus of our costs, then we don't. Then that's a signal that we might need to refine our costing system. So what do we do and implement activity-based costing system? We want to gain the support of top management and create a sense of urgency. We want to create that sense of urgency. Why? Because we need to hurry up and get this going. Because the longer we delay this, then the longer it's going to take for us to reap the rewards of that. We need to create a guiding coalition of managers throughout the value chain for the activity-based costing effort. Because if we just do activity-based costing in one part of the value chain and not everybody, then a lot of our efforts are going to be wasted. Educate and train new employees in activity-based costing as the basis for employee empowerment. So we want to get those employees trained, help them to understand what we're doing, why we're doing it, and then that will help them. And maybe they see a lot of stuff. And when we're at, and from a personal experience, getting people involved in developing and tracing activities is a great way to see a lot of things that maybe we don't see as management. So getting employees involved is definitely crucial. Then we want to seek small short-run successes as proof that implementation of ABC is yielding results. We just need to see a little bit more. If we just see a little bit of success, we can take that and capitalize on it and go from there. For example, let's say a football team, due to a number of penalties or whatever, is first down and 30 at their own 10-yard line. Are they going to the conditional or the traditional way would be get some yardage here and there because we have 3 downs, maybe 4, depending on the situation, to get those 30 yards. So we don't have to get the first down, get another first down on the first play. We have multiple downs, so let's take bits and pieces and get maybe 8 yards here, 15 yards here, another 6 yards here, and so forth. Let's get ourselves into a better position. So I'm going to take things incrementally, and each increment I'm going to capitalize on and use this as a base to continue and to keep moving down the field. And again, ABC system is not perfect. We have better cost projections and better cost accuracy, but it's a very complex system and it can be very expensive. So now with activity-based management, it's just any system of management really, of management decision making that uses activity-based costing to improve customer satisfaction and profitability. Always as a company, we want to improve profitability, right? I mean, that kind of makes sense. I mean, we're in business to make a profit. We're not charity. I mean, there's nothing wrong with charity. I don't want you to think that I'm knocking charities. I wholeheartedly believe in charities. But if we're a company that is looking to make a profit, then we need to show profitability. And also, we want our customers' satisfaction. So we want to improve customer satisfaction. We always want to increase that and never rest on our laurels. And activity-based management will broadly be defined to include decisions about pricing and product mix, cost reduction, process improvement, and then also product, and maybe even redesigning the process or the process design, or maybe even reduce or changing our product packaging, different things like that. So, and we also can see activity-based costing. We won't really get into it much in this chapter. The book really doesn't get into it here, but it can be used in applications outside manufacturing, in healthcare, banking, telecommunications, retailing, transportation. So we see these purposes, the activity-based costing systems, can be adapted to both the service sector and the merchandising sector if the company is willing to implement them and take the time. Now, of course, those activities are unique. Probably be easier, in my opinion, and I could be wrong, to implement those in a service environment, but a merchandising environment may seem a little more difficult. However, not impossible, and we can do that. So, this is Leroy Meadows. I want to thank you for being a part of our session here on activity-based costing. If you have any questions, please feel free to email me. I'll be more than happy to respond.